Yes, welcome you all to the 70th GST session. As you all know, the today's topic is refunds under GST. So moving on to the session. Yes, this is the agenda of today's session. First, we'll discuss about the legal provisions about the GST, and then we'll also discuss about the various types of refund applications, refund claims available under GST, and what would be the documentation and procedure, how to apply for the refund. That also we'll discuss. And at the end, along with the refund type, we'll discuss the issues and practical challenges we are facing in the day-to-day refund at the time of filing a refund application. So before moving on to it, what is the refund? In GST Act, nowhere definition for refund has defined. So if you take the dictionary meaning, refund refers to repay, give back, restore, reimburse, restitution of sum or money. It is not a case of incentive scheme or any concession given by the government. And also, refund is a special provision in the taxation law, which has its own machineries of assessment and adjudication. It means refund cannot be claimed as a right. Unless there is a specific provision in the Act, we cannot claim the refund of the tax paid. So, refund is accompanied by recovery provisions, and both are complementary in nature. Whatever the tax law you see, if there is a refund, there will be a recovery provisions also. So what are all the sections that deals with the refund? So in GST Act, section 54 to section 58 deals with the refund, and rule 89 to rule 97 provides the rules with respect to the refund. And in the GST Act, separate forms has also prescribed, that is from the RFD 01 to RFD 011. These are all the forms which are provided to file the refund application. We'll discuss in detail about each of the form from RFD 1 to RFD 11, and also the circulars. Coming to the circular, at the time of introduction of GST, there are a lot of confusions in the trade. How to apply refund, how to get that refund. So in order to remove those difficulties, so many circulars CBIC has issued. So in 2000 up to 2019, refund is a manual. We have to apply the refund manually through RFD 01A. But from 2019 onwards, refund has made electronically. It's a system based. Everything will be driven by the system. So in 2019, Master Circular number 125/44/2019 has issued. Suppressed the earlier circulars up to 2019. Whatever the circulars are there with respect to the refund, they have suppressed all those circulars and issued this master circular, that is 125 circular. And after 1 year, another circular, which is addendum to the circular 125, had issued. So even now in 2024 also, if you want to check any clarification with respect to the refund, we'll refer circular 125 and 135 only. And some other circulars are also there still. We'll discuss about the circulars also. What are all the clarifications provided by the circulars? If you see what are all the scenarios, we will get the refund under the GST. So refund by the registered person. Section 54, subsection 3 provides for the refund of unutilized ITC, whereas section 54, subsection 8 provides for the refund of tax which we paid. So if you see the section 54, subsection 3, refund of unutilized ITC for any tax period. Under this section, refund of ITC will be allowed only in the two cases. That is, zero rated supplies made without payment of tax and inverted duty structure. Other than these two cases, we cannot claim input tax credit as a refund. So you may ask, what is the zero rated supply? That we will discuss in the later slide. So hope you understand, only in the two cases we can claim ITC, input tax credit, can be claimed as a refund. That is zero rated supplies and inverted duty structure. And there are also some conditions to this. In case of export, if the exports are subject to the export duty. Recently, government has levied the export duty on rice. In such cases, we cannot go for a refund. And also, if we claim the duty drawback of central tax, in that case also we cannot go for refund under this category, export without payment of tax. Now coming to the section 54 subsection 8, that is refund of taxes, what we have paid. So if you see what are all the category of those supplies. Zero rated supplies on payment of tax, that is exports with payment of tax. So and also deemed exports. Refund can be claimed both by the supplier or recipient. Either of the party can go for the refund in case of the deemed export. And refund of tax paid on advance for which supply not made. So we know that on advance we need to pay the tax on services. So we have received the advance and paid the tax, but later we have not made any supply. In that case also we can go for the refund under section 31 or section 54. And also in CGST and SGST paid on interstate supply but held as the actual liability is IGST, but I have paid CGST and SGST, and vice versa. In that case, I can go for the wrong payment of go for the refund of wrong payment of tax and payment of tax or interest without passing instance to other person, that is unjust enrichment. And also the advance tax paid by the casual taxable person and the non-resident taxable person. So in all these cases, no, only in these scenarios we can go for the refund. Okay. So what is zero rated supplies? There is a misconception that many people will think that zero rated supplies means that supplies which attract zero rate is a zero rated supply. That is not correct. Zero rated supply is a different category. Zero rated supplies are defined in section 16. What section 16 is saying? Zero rated means export of goods or services and supply of goods and services to SEZ unit for authorized operations. For authorized operations, this wording has been inserted from 1st October 2023. Earlier, there is no word of authorized operations in the section 16. Earlier, mere supply to goods or services to SEZ units is a zero rated supply. But from 1st October 2023 onwards, even though if you supply the goods or services to SEZ unit, you have to prove that are being used for the authorized operations. Otherwise, department will not give you a benefit of zero rated supply. Okay. Hope it is clear. And the section 16 provides the conditions, safeguards, and procedures in case of refund under the category of zero rated supply. So before moving on to okay. So you may have a question that when does a refund arise? Can I go if I export goods or services? Can I go for the refund? The answer is no. So in case of exporter, ITC in case of LUT, if I made an export without under the category of export without payment of tax under LUT or the bond or the tax in case of export with payment of tax. So I am making the, if I am having only the exports, I am into only 100% of exports, then the ITC will be accumulated. I cannot utilize the ITC. Then I can go for a refund of that unutilized ITC. And coming to the next part, where my output tax liability is less than my input tax liability. So let's say my all my inward supplies are subject to 18%, whereas my outward liability, outward supplies are subject to only 5%. In that case, my ITC will get accumulated, right? In that case, also you can go for the refund under inverted duty structure or deemed exports. If you have any balance in cash ledger, in what cases, how the balance in cash ledger will come? You might have paid the tax by mistake or TDS TCS credits. You can if you claim the TDS and TCS credits, it will get credited to the electronic cash ledger. In that case, if you unable to use the cash balance, you can go for the refund, or you can utilize for your outward supplies also. And there are other scenarios also. refundable as a consequence of judgment, decree, or order or a direction of an appellate authority. If you go for appeal on any subject matter, um, if you got any favorable order saying that any judgment or direction, okay. Okay. So before moving on to that, what are the various types of refund available under GST? So till now, in what cases we discussed it, in what cases we'll get a refund. So now we will see what are all the various types of refunds available under GST. If you see the first one, refund of unutilized ITC on account of exports without payment of tax. So in case of export without payment of tax, if any ITC is accumulated, unutilized, in that case, we can go for a refund. And refund of tax on export of services with payment of tax. On export of services with payment of tax, I have paid the tax. So whatever the tax I paid on export of services, I can claim the refund. And next one is refund of unutilized ITC on account of supplies made to SEZ unit or SEZ developer without payment of tax. It is similar to the exports. If you have made any supply to SEZ without payment of tax, that unutilized ITC, you can go for a refund. So refund of tax on supplies made to SEZ units made with payment of tax. The tax paid on SEZ with payment of tax, that also you can go for the refund. And refund of unutilized ITC on account of accumulation due to inverted duty structure. So as we discussed in the previous slide, that in case of inverted duty structure, my output tax liability is 5 and my inward is 18. Because of this, my ITC will get accumulated. That accumulated ITC, we can go for the refund. And refund to supplier in case of deemed exports, and refund to recipient of tax in case of deemed export. In the first slide, I have discussed about the deemed exports. So either the supplier or the recipient can go for the refund in case of the deemed export supplies. Refund of excess balance in electronic cash transfer. This also we discussed. Refund of excess payment of tax. By mistake, if you paid any tax, in that case also we can go for a refund. And refund of tax on intrastate supply, which is subsequently held to be interstate. So wrong payment of tax, instead of IGST, I have paid CGST and SGST, I can go for refund of the wrong payment of the tax. So this also discuss refund in any other ground or reason. If it is not covered any of the above type, we can go for a refund under this. If you feel that you will get a refund, you can claim the refund under this category. So there are 12 types of refund applications prescribed in the Act. So if you see from 1 to 12, you may get a doubt that for SEZ with payment of tax, there is a separate refund application. But for exports with payment of tax, there is no refund application. Why? You may get this doubt. So how to claim the refund in case of export made with payment of tax? So we'll see for exports with payment of tax, there will be no separate refund application. Shipping bill itself is a refund application. As and when you file the shipping bill, and it's as equivalent to as filing of the refund of tax paid on the shipping bill. We'll discuss about each type of this application in details in the later slides. So what section 54 subsection 1 says, any person can claim refund of taxes and interest paid within 2 years from the relevant date. So after 4 or 5 years, I cannot claim the refund of 4 years on 4 years prior supplies. So within 2 years from the relevant date only, I can go for a refund. So be careful while filing the refund. So it's always better to file the refund application as early as possible. So what is the relevant date? In case of exports by sea or air, relevant date would be the date on which ship or aircraft in which goods are loaded leaves India. As on which date it is leaving India, that is the relevant date. From that date, we have to check for the 2 years. And goods export by land, the date on which such goods cross the customs frontier, that is the date. From the date, you have to checked for the 2 years, and goods export by post. Such good date of dispatch from the post office will be the relevant date. Similarly, if you see the services exported where the supply of service has been completed prior to the receipt of the payment. Before receiving of the payment itself, the supply has completed. In that case, date of receipt of payment will be the relevant date. In case of services exported, the payment has been received in advance. Before supply completed itself, we have received the consideration. In that case, date of issue of invoice will be the relevant date. Okay. In case of inverted duty structure, IDS due date of the return for the tax period under section 39 will be the relevant date. Similarly, in other cases, the relevant date I have given here. So mostly we will deal with this only export by sea or rail or IDS, inverted duty structure, and the services only. So that's why I have discussed all this. Anyway, we will share this PPT to you. If you want to refer the relevant dates, you can refer from here. So now we'll see the procedure of filing refund application. Before going into this procedure, first we'll discuss about how to file the GST, how to claim the refund of GST in case of exports made with payment of tax, on payment of tax. So under zero rated supply, we can claim the refund. Options for claiming refund under two types: with payment of tax and without payment of tax. In case of with payment of tax, taxes paid will be refunded, and in case of without payment of tax, unutilized ITC will be refunded. So in case of exports made with payment of tax, shipping bill filed by an exporter is deemed to be an application for refund of the IGST paid. When it is deemed to be filed, it is deemed to be filed only when the EGM has updated in the ICE portal, ICE portal, and the applicant has furnished the details of exports and filed the valid return in the GSTIN 1 and 3B. Okay, as and when you file a shipping bill, if the EGM had generated for that shipping bill and you have correctly furnished those shipping bill details in the GSTIN 1 and the corresponding GSTIN 3B as filed, then automatically, as and when the shipping bill details in the customs portal and the shipping bill details what you have furnished in the GSTIN 1 match, automatically the refund will be disbursed to your bank account registered with the GSTIN. So in the GSTIN 1, you have to furnish the details of export invoice, like shipping bill details, port code, and EGM date, EGM number, and value also should exactly match with the what value you have reported in the shipping bill. If all these details get matched, then the GSTN will transmit the details to the IceGate portal in the custom set developed in IGST refund module. In the refund module, all these exports with payment of taxes will get processed. So upon confirmation, an amount equal to IGST in respect of shipping bill or bill of entry to be electronically created to the bank account of the applicant. So what are all the checkpoints we need to check before filing of the GSTIN 1? So tax amount as per 3B should always be greater than or equivalent to GSTIN 1. Let's take an example. If my GST, if I have my liability on exports with payment of tax is 1 lakh IGST. In the GSTIN 1, I have disclosed 1 lakh. But whereas in the 3B, in the 3.1B table, that is the liability on zero rated supply, I declared 99,999. In that case, my shipping bill, my export invoices will not transmitted from the GST portal to the customs portal. Okay, either it should match in the GSTIN 1, it is 1 lakh, and it should be in GSTIN 3B also, it should be more than 1 lakh or 1 lakh 1 rupee. Then only such export invoices will get transmitted from the GST portal to the customs portal, IceGate portal. And the shipping bill number and date of invoice and date of port code should match between the shipping bill and GST error. If you don't furnish the details, a shipping bill number, date, invoice number, then also these export invoices from the table 6C of GST 1 will not get transmitted to the customs portal. In that case, what you can do, you can correct, you can in the subsequent period, you can amend the GST 1. Apply if there is any discrepancy, if any error in the shipping bill, then you can apply to the customs house to amend the shipping bill. Before filing of the GSTR 1, it is always advisable to check the shipping bill inquiry, IGST validation inquiry in the IceGate portal and the GSTIN inquiry to find the refund, if any refund not received. So, okay. After this after yeah, practically I will show how to check the IGST validation inquiry and GSTN inquiry in the IceGate portal as well as in the GST portal. Before that, we'll discuss about what are all the various errors that will be thrown by the IceGate in case of any error, mismatch between the GST portal and the customs portal. So in case of SB 000 successfully validated, so everything is matched: shipping bill number, invoice value, invoice amount, IGST amount, EGM, everything get matched with the customs portal. So you know, no need to do anything. Refund will automatically get credited to your bank account. If you see any error in the IGST validation, SB 001, in that case, what it means, SB 001 means invalid shipping bill details. In that case, what you have to do is, in the subsequent period, you have to amend GSTR 1 using that is in the table 9A. So you replace the shipping bill with the correct shipping bill number and a date. If you see any SB 002 error code, in that case, EGM not filed. In that case, what you have to do is you have to follow up with your liner to retransmit your shipping bill, so that the EGM, as and when the EGM will get updated in the customs portal, automatically refund will get created to your bank account. Coming to the SB 003 GSTN match. What it means, I am located in Andhra Pradesh and I have actually the export invoice as raised by the AP registration, that is the AP GSTN. But instead of while filing the GSTR 1, such export invoice has reported in the Tamil Nadu GSTN. Okay. In that case, as per customs portal, GSTN belongs to AP, whereas from the GSTR 1, the details are the Tamil Nadu. In that case also, there will be a mismatch and refund will not get processed. In that case, what we have to do is report that invoice in the AP registration, AP GSTN, and remove it in the Tamil Nadu registration. In that case, in the next period, invoice will get pushed to the IceGate portal and the refund amount will get processed. And coming to the next error code, SB 004. Record already received and validated. Already you have reported this invoice in the previous period or any the previous period. In that case, this error will get. So what you have to do is you have to remove that record from the GST 1 in the subsequent period. SB 005 invalid invoice number. In this case also, you amend table 9A. SB 006, you may see this error, gateway EGM not available. In this case, what you have to do is, in this case also, ask your CHA to retransmit the shipping bill, so that if any error struck in some error, it will get rectified. So before moving on to the issues, I will show you the practically how to check the IGST validation before filing of the GSTR 1 return. Just a second. So hope my screen is visible to you all. And then when you log in into the IceGate portal, you go to the inquiry services. You can see the GSTN inquiry here. Okay. Is my screen visible to you all?
Yeah, Jagadeesh.
Yeah. So here in the inquiry services, if you go to the GSTN inquiry, you give the IEC details, GSTN number.
Yeah. Again, capture it.
Sorry. So as and when you're filing, actually, this GSTN inquiry will get the details from filing of the shipping bill. These are the details be there with the customs portal. So if you see here, the invoice date, EGM number, EGM date. So it is, if you see here, the tax value and IGST amount is not there for these invoices. And for exports made with payment of tax, you can see the taxable value and the IGST amount. And you can see the shipping bill number and the shipping bill date, invoice date, taxable value, and the tax amount. So to match this data, you have to file your GSTR1, right? So next, after filing of GSTR1, you can check the details here. So as and when you file the GSTR1 and 3B of the corresponding period, all these invoices will get transmitted from the GST portal to the IceGate portal. You can see here what are all the shipping bills transmitted, invoice date, response code. If you see here, the error code is SP001. That is the invalid shipping bill details. In this case, what you have to do is you have to amend the details in the subsequent period GSTR1. If you have rectified this error, automatically in the next period, a refund will get created. If you see here, SB004, what is the error code? GST3 is already received. For this invoice, we have already claimed the refund in the past period. If you see here, SP000, successful. So everything get matched. So you will get the refund. So after correcting all these errors only, after getting SP000, you can check the status of refund in the next step. See here. So these are all the errors. You have to ensure that every shipping bill will get the SP000. So I just scroll sanction status. After getting SP000, you can go here and by giving all the details, you can check for the credit date in the bank. You will get the bank reference date and when the scroll has generated all this, you can check it here. So now we'll go to the GST portal also. How that is getting transmitted from the GST portal to the SGate portal. See here in the refunds column, track status of invoice data to be shared with the SGate. So here you have to select the period. So in table 6A, you have reported total 26 export invoices, but invoices transmitted to IceGate is 0 because in the table 6A, they have not updated the shipping bill details, shipping bill date, and all those details. They have not updated. That's why these invoices are not transmitted. Only when you have given the shipping bill details, then only these invoices will get transmitted to ISGate. Otherwise, these invoices will not get transmitted. So here, if you see invoices not transmitted to ISGate, if I click here, I will get the report. Why these invoices are not transmitted? See here. Because of not giving shipping bill or port code details, that's why these invoices are not transmitted to my ISGate. If you report correctly here, then automatically refund will get created in your bank account. This is how the IGST with payment refund module will work. Any doubts on export with payment of tax refund? Okay. So in the chat box also no questions are there. Okay. Assuming that no doubts are there. If you yes, just a second, some questions. Yeah, no questions are there in the chat box also. So that's the reason. This is also the checkpoint. In 3B always show at least 10 rupees more than the liability what you declared in the GSTR1 with respect to the exports column. That is 3.1B. 3.1B should always be more than or equivalent to the table 6A of the GSTR1. So this before filing of GSTR1, you get download the details from the ISGate. That is from the IGST validation inquiry. Whether check whether you are correctly reporting correctly the shipping bill number, date, and the port code. Okay, these are all the errors. All these we can rectify from the GSTR1 only. So now we will come to the issues with respect to exports made with payment of taxes. So exports with payment of taxes wrongly disclosed in table 3.1A of GSTR 3B instead of 3.1B. So zero rated supplies made with payment of tax, those should be reported in the table 3.1B, not in the table 3.1A. 3.1A, in the 3.1A, we report the domestic outward taxable supplies. As I said earlier in the previous slide, the 3.1B should always be more than or equivalent to the table 6A of the GSTR1, that is the export table. So what we can do here is, if you have the domestic supplies in the next period, report that in the table 3.1B to the extent what you have reported by mistake in the current period. Let's say 1 lakh is my export liability on the export. I reported this in the table 3.1A in the current period. In the next period, what I have to do is, if my domestic supplies is 3 lakh, report 2 lakh in the 3.1A and report 1 lakh in the 3.1B. Then even the refund module also will not check only for that period. Cumulatively, it will check from 1st July 2017 onwards till date how much is the liability on the exports reported in GSTR1. Similarly, in case of 3B also, what is the cumulative liability that I have discharged liability through 3B? If my liability paid through 3B is more than GSTR1, then only it will get transmitted to the ISGate portal. Otherwise, it will not get transmitted. So in the next period, if you report like that, then refund will get processed. Let's say you are into 100% export only. You don't have any domestic supplies, domestic outward taxable supplies. In that case, what we have to do? Then make an for the 2018 and 2019, customs have issued the circulars how to resolve these type of errors. Only for those years they have issued the circular, but now there is no such um, uh, no such correction available for the current period. For 18 and 19, you can correct manually. From the back end, what they will do is from the back end, they will regrade from 3.1 to 3.1b. They will correct it. From you have to make an application to the customs house, and customs house will send the list of all these type of errors to the DG systems, GSTN, and the DG systems from the back end, they will debit to the 3.1a and recreate to the 3.1b. Like that, they will do it. And coming to the next issue, you can't amend the invoice for the second time. First time, you have identified the error, but instead of 10, you have entered 00. Okay. And can I amend it for the next period also? Well, in GST portal, you can amend invoice only once. You cannot, portal will not allow you to amend the invoice multiple times. So please be careful while amending the invoices in the GST portal. Amended invoice date can't be after the return period. This is we have to be very careful with respect to this. Okay, if I keyed in the GST portal my invoice date as 27 April 2024, but my actual shipping bill date is filed on 4th May 2024. In that case, portal will not allow me to amend the 27th April as a 4th May. In that period, on or before 30th April, it will allow me to amend. But after the return, future return period, you cannot amend. Before 30th April, you can also amend it to 31st March, but you cannot amend it to 1st May 2024. So in this case also, in this case, what you can do is, in this case, refund will not get processed on the export with payment of tax invoice. In this case, what you can do is apply refund under any other category application, and also proving all this to the department officer. It will be very difficult to convince the departmental officer to process the application under the any other category, but try. Okay. Going on to the next slide. So I just refund on exports. Now we'll see the how to claim the refund in case of exports made. Another issue also there. Before moving on to the exports without payment of the tax, the export consignment made with payment of tax, but rejected due to some quality issues. Buyer has not accepted our goods and rejected because of some quality issues. Then I have to re-import back to the India, right? So while re-importing, do I need to pay back the refund amount? Because EGM, I have exported goods, EGM has filed, refund got processed, and refund amount got created in my bank account also. In case of return container, do I need to repay the refund amount? The answer is no. In such case, on bringing back goods to India, it will be the import, re-import. On re-import, you will pay the IGST, right? That IGST you can avail input tax rate in your ECL. Okay. So next issue is, do I need to disclose any credit note in GST return? For the return shipment, do you need to disclose any credit note? The answer is no. Issue of credit note under section 34 is optional. Option 1, we can close the customer ledger by issuing the financial commercial credit note, or issue the credit note and disclose the same in GSTR1 under table 6B. But ensure while discharging the liability in GSTR 3B, don't reduce the liability in the 3B. Because again, that cumulative GSTR 1 comparison with 3B will not get matched. It will get matched with the table 6A only. Table 6 minus 6B, it is not setting off. Only it is comparing with the table 6A and the 3.1B. That's the reason I always suggest you to issue the financial credit note or the commercial credit note. Otherwise, the system will not transmit the next shipment invoices also to the SGATE portal. Now we'll see GST refund on exports or SEZ supplies made without payment of the tax. So, okay. In case of exports made without payment of tax or supplies to SEZ, as and when you file the shipping bill, goods have to be exported out of India within 3 months from the date of issue of the invoice. And in case the goods are not exported within the 3 months, taxpayer has to pay tax on such supply along with the interest at the rate of 18%. Okay. In this case, if we have not made the exports within that time, the LUT, letter of undertaking or the bond will be withdrawn immediately. However, if you have rectified that, if you have exported that, the same shall be restored. Same shall be restored. And in this case also, how to claim the refund in case of exports made without payment of the tax. The details of export invoices provided in the table 6A of GSTI shall be transmitted electronically to the customs confirmation that goods covered under the invoice are exported out of India. That means we will report the exports made without payment of tax in table 6A, right? These will be transmitted to the custom portal to check whether really such goods are exported out of India or not. What is the confirmation? EGM, Export General Manifest. That is the evidence that goods are moved out of India. So how to claim and the documentation procedure that we will discuss in detail. Okay. So what is the maximum refund that I can claim under this category? That is without payment of tax. Net ITC into turnover of zero rated goods or services. Services we'll discuss as a separate category. That we will discuss only with respect to the goods. Net ITC into turnover of zero rated goods divided by adjusted total turnover. What is this adjusted total turnover? We'll discuss that also. Before that, we'll see what is the net ITC. Net ITC means the net input tax credit for the refund period. If I am claiming the refund for the Jan to March, I have to take the ITC after reversals under Rule 42 or ineligible, whatever it may be, the ITC after reversing all these, whatever the ITC is there, only that ITC we have see here. The net ITC is input tax credit availed on inputs and input services during the refund period. So here I want to highlight this. If you see here, net ITC means only input tax credit availed on inputs and input services, not the capital goods. Whereas in the exports made with payment of tax, there is no discrimination between input services and capital goods. But here you can claim the refund only on inputs and input services, not on the capital goods. If there is any ITC pertains to the capital goods, you have to carve out from the net ITC. So net ITC means only inputs and input services, not the capital goods. Under this category, you can claim only on the you cannot claim the refund on the capital goods. So okay, net ITC is also okay. What is the turnover of zero rated goods? Turnover of zero rated goods means value of zero rated supply of goods made during the relevant period, that is from the Jan to March without payment of tax and bond or letter, or the value which is 1.5 times of the value of like kind of goods domestically supplied by the same or similarly placed supplier and declared by the supplier. So what it means? Okay, the first part is okay. And what is this 1.5 times the value of like kind of goods? If I am exporting the mobile phones, I'm exporting mobile phone to the USA. Let's say for 200. Whereas the same phone, same mobile phone, and I am domestically selling it for the 100 rupees. So as per my shipping bill, well, as per my export value is 200, but in the same product I am selling it here in India only for the 100. So what it is saying, turnover of zero rated, I cannot take 200 as my turnover of the zero rated goods. I can take maximum of 1.5 times of the like kind of goods domestically supplied. So 100 into 1.5 is 150. So here I have to consider the turnover of zero rated as an 150, not 100, not 200. Okay. Hope it is clear what is the turnover zero rated goods. For this, they have in the rules also 89.4C is also there, how to compare with the domestically like kind of goods. And then what is the adjusted total turnover? Adjusted total turnover means my total turnover as reduced by the exempt supplies. Okay. Let's say if my total turnover is 1000 crores and in that my exempt supplies is 100, then my adjusted total turnover is 900. So let's discuss with an example. If my net ITC is 100 rupees and my turnover of zero rated supplies is 500 rupees and my adjusted total turnover, that is 900 minus 100 divided by 900. How much I will get? 100 into 500 divided by 900. So let's take an if it is after let's take a simple example, 100 into 500 divided by 1000. In that case, I will get a refund of 50 rupees. Okay. So if you see here, if you see the definition of the exempt supplies includes non-GST supplies also, which is not chargeable to tax under the Act, and it also includes the scheduled transactions also. So this is the formula. This is how you have to arrive the maximum refund amount. So I'm getting the 50 rupees as a refund, right? In the net ITC, I'm clubbing both CGST, SGST, IGST. Let's say CGST, SGST 2020 and my IGST 10 rupees. Okay. So that is the ITC. So how to claim the refund? I'm getting the 50 rupees as my refund maximum refund amount. Can I claim the 50 rupees only in the in what in which category I have to claim, whether on CGST, SGST, IGST? It's your choice. You can claim the IGST if subject to availability of the balance in the electronic rate ledger at the time of filing refund application. Okay. If you see here, refund will be sanctioned granted to lowest of the following. The balance in the electronic rate ledger at the end of the tax period, that is from the Jan to March, you are filing refund application, right? Whatever the balance that is available at the period end, that is on the 31st March 2024, whatever the balance is there. If my IGST balance on 31st March 2023 is 50,000 and my balance in ECL at the time of filing refund application. Now I'm in April. Today I'm filing refund application. If my balance of IGST is only 40 rupees today. In the previous case, I'm having 50 rupees, but today I'm having 40 rupees. And as per the refund formula, I'm getting 50 rupees. So lower of these three, I can claim the refund. So in this case, maximum refund I can claim is only 40 rupees. Okay. So what is the documentation required in case of exports made without payment of tax? Whereas in the exports with payment of tax, there is no documentation, nothing is there. Whereas in case of exports made without payment of tax or supplies made without payment of supplies to SEZ made without payment of tax, you have to follow the documentation prescribed under the Act. So Circular 125 has prescribed the documentation. Circular 125 along with the Circular 135. What are all the documents you need to submit along with the refund application? So, okay. So what are all the documentation? You are claiming the refund application from Jan to March, right? You have to submit the GST 2A for that period. statement of export invoice and FIRC, shipping bill and EGM. FIRCs you no need to submit in case of export of goods. Only in case of export of services you need to submit the FIRC copies. And in case of the export of so statement of inward supply of invoices, whatever the ITC on which you are claiming the input, you need to submit the statement of invoices in the Annexure B. What is the Annexure B? Annexure B as prescribed in the circular number 135, and declaration of incidence of tax, that is unjust enrichment has not happened. That declaration you have to submit, and also the declaration that no drawback has been claimed. That declaration also you need to submit, and also give the declaration that you have not claimed any ITs on the nil rated or exempted supplies, and also there is no prosecution for any offense under the GST Act. That declaration also you need to submit. And this is the Annexure B. If you see here, invoice number, invoice date, this is the statement of all the inward supplies you need to submit along with the HSN details. Even though your supplier has not given any HSN, but you need to give the HSN details. And only the eligible ITC and the amount of eligible ITC. And this is the statement 3, statement of invoices. You need to these are all the statement of invoices. This is for the export of goods without payment of tax. You need to submit this. You have to upload the statement in the portal. The statement will get validated only when all these invoices are uploaded in the GSTR1. And even the value should match with the GSTR1 values. Otherwise, this statement will not get validated. In this statement, along with the invoice file details, you have to give the EGM details, port code, shipping bill date, shipping bill number, and FOB value. Unless you, yes. Without this validation, you cannot upload the statement in the GST portal. So along with the documentation, you no need to submit the statement to the department, because anyway you will upload this the details in the portal validation. So BRCs are export. In case of export of goods, do I need to submit BRC or FIRCs? The answer is no. In case of export of goods, you no need to submit any BRC, FIRC. Only in case of export of services, you need to submit BRC or bank realization certificate or the foreign inward remittance certificate that you have realized the foreign currency. And in case of export, only a statement containing, only you need to submit the statement as we seen in the previous step, containing the number, date of export invoice, number and date of shipping bill. Need to submit it along with the refund claim. So what are all the issues in case of exports made without payment of tax? So in the GSTR1, is my, okay, just a second. Just a second, I'm resharing my screen. Okay, what are all the issues in case of exports made with payment of the tax? Export made with payment of tax, wrongly disclosed with payment of tax. In the GSTR1, at the time of filing GSTR1, your invoice is actually export without payment of tax category, but by mistake, you have selected with payment of the tax. In that case, you cannot amend with payment to without payment. As and when you report with payment of tax, that those invoices will get transmitted to the ISGate portal. So what system will think, okay, this taxpayer already claimed the refund on this invoice, so this invoice should not be amended again. So that's the reason portal will not allow you to amend with payment of invoice to without payment of tax. So in this case, how can I claim the refund? In this case, claim the refund under any other category. explaining the reason to the officer why you are claiming the refund under any other category and not in, and why not in the exports made without payment of tax. So refund, there is no difference between the procedure in case of exports made without payment of tax and SEZ supplies made without payment of the tax. Only difference is that in case of SEZ made with payment of tax, you need to submit the DTA procurement copies. DTA procurement is an evidence that your goods has admitted into SEZ and those goods are using for the authorized operations. From 1/10/2023 onwards, Section 16 has amended. Earlier, there is a no word of authorized operation. Now they have inserted for authorized operation. Earlier, mere supply to the SEZ units is an SEZ supply. But now we have to prove those goods what we have supplied to SEZ units, those goods or services are used for the authorized operations. Then only we'll get the benefit of the zero rated supplies. So what about the supplies made prior to the amendment? It is a prospect amendment, not a retrospective amendment. You can defend based on this. Is SEZ can claim refund of accumulated ITC? Yes, SEZ unit also can claim the refund with effect from 14/11/2019. Statement 4A has also inserted. However, till now, this form is not operational as on today also. For computing export turnover, which value is to be considered, CF or FOB? In my view, what the transaction value should be considered. Either it may be the FOB value or the CF value. Many cases, the department will consider FOB value only. So, 54 subsection of what it is saying, so, the maximum time limit which I can claim the refund is 2 years. So, let's say my last date to file an refund application is 31st March 2024. I have filed my refund application on 28th March 2024. But the deficiency memo had issued on 4/4/2024. In this case, can I file the fresh refund application? Because on 31st March, time limit to file a refund application is getting expired. In this case, yes, you can file the refund application. The period from the RFD01, that is the filing of the refund application, to the RFD03, the date of issuing of deficiency. Such that period shall not be included for the computation of the time limitation to file the refund application. So in this case, from 28/3/24 to 4/4/24 will get excluded from the 2 years. You will get that period as an additional period. So you can file the refund application on or before 8/4/2024, because from the date of filing refund application RFD01 to RFD03, there are 8 days. So if you add 8 days to the 2 years, you can file the refund application before that extended period. So do I need to submit any physical documents to department for refund processing? The answer is no. From 2019 onwards, entire refund processing is electronic mode only. Still, the department insists the submission of various documents for the refund processing. Also, the barring of exemption. Yes, there are some restrictions for making with payment of tax. The restrictions are in case of if the exporter has procured goods against advance authorization, UOU, or UOU, STP, HTP, imported or procured goods from warehouse, that is a bonded, custom bonded warehouse, and imported goods against advance authorization, and procured goods under concession rate, that is a 0.1% merchant exporter. In this case, they cannot go for the export with payment of tax. Many exporters has gone for the with payment of the tax. Now, investigation authorities are issued the notices, and inquiries are going on many exporters who have made export with payment of tax and avail all these concessions. To avoid these disputes, it's better to pay back the whatever the IGST exemption you have availed and claim the same ITC on the same. So now GST refund on export of services. This handed over to Ashika ma'am. Ashika ma'am, can you please take on from here? Just a second.
I hope so screen is visible. Now,
Yes, it's visible.
Jagdish has taken us through what are the basic provisions under GST for refund, what are the steps you should do, how the export of goods, refund for export of goods you can do with or without payment. Now coming to the part of export of service. Service and goods refund doesn't go in a similar manner, though the way of computation maybe seems to be same. Now, if we see for goods, now in case of goods, export of goods, they simply said it is okay, goods should move outside of India and then it will qualify as export. But when it comes to service, it is not simple the way it is for goods, because goods is tangible, movement can be tracked. Therefore, simple definition, if move out of India, it is export. In service, when we come, you are seeing there are 5 points you need to keep in your mind in order to qualify as export. Now, before going into whether you are, how you should claim refund, whether you are eligible for refund or not, the first thing you should know whether you are qualifying as export of service or not. The things which you have to make sure in order to qualify as export of service is, first, supplier of service is located in India. Now, most of the time when we see, okay, we are the person who are providing service, we are in India, okay, fine. Now then comes my recipient should be located outside India. That also get compliance. We might get from work from UK, US, whatever may be the situation, outside party has allotted us some work. Then come the main thing, place of supply is outside India. It's very important that there may be a case, point number 1, point number 2 may get satisfied, but point number 3 may not. So it's very important to know whether the place of supply fall outside India or not. One, for example, suppose, okay, A is the supplier who is located in India. He has been asked by C, who is located in India, to get one immovable property, renting of immovable property, which is located in India. Now, in case of immovable property, place of supply is where the property is located. Now, your point number 1 got satisfied, that A is in India. Point number 2 got satisfied, that B is outside India. Even point number 4, that the payment should be received in Forex, may also get satisfied, that B has paid you in Forex. But point number C, that place of supply should be outside India, has not been satisfied, and therefore same will not qualify as export, and you will be liable to pay tax on the same. Similarly is the situation with intermediary service. Over there also, who are the facilitators of goods and service, place of supply is where the intermediary is located. So you need to be very careful. You should not see that, okay, one person here, one person outside, receive in Forex, done. It's not so simple in case of under GST to qualify as export. You have to make sure your place of supply also fall outside India. Now, another thing is, when I said about the part, these 4 conditions are made to qualify as export. But with this, there is one 5th part they have inserted, that if it is a transaction between merely a distinct person. Now, under GST, state-wise registration operates. So even though under PEN, you are a one person, but under GST, you are a multiple person, and that thing they recognize as a distinct person. So they have said if this is a transaction between distinct person, means you might be having a head office in India and branch in US. The transaction which is happening between India and US head office and branch will not qualify as export, even though all other 4 conditions may get fulfilled. So you need to check if it is a transaction between a branch office, representation office, or license office, then you have to check 5th number point. However, if it is a holding and subsidiary company, then 5th number point doesn't hold, because both of them will be registered under the Act. If it's a subsidiary company located outside India, it will be registered under Foreign Act. Similarly, if it is in India, then it will be registered under Indian Act. So having 2 different legal entities, then point number 5 will not hold. Now, before discussing refund, I want to have you to know what does export stand. Otherwise, you can't jump on going to refund, because basically then your refund application will get rejected. Now, all these 5 points which I have put in, I would like to discuss one by one. Wherever there is certain things you need to keep in mind, or wherever department has issued clarification, or wherever some or the other notices or issue has been raised by government officer whenever you have filed the refund. So supplier of service located in India is more or less everybody know, and recipient also knows that where the place of business they are operating. For place of supply, you need to be careful with the part of section 13. Now section 13 talks about place of supply. Now you have to check whether you are falling under export by way of being outside India or not. For that, you have to refer section 30. I'm not going into a detail of each and every one. Like I discussed 2 point, whoever is whichever in business, whichever service industry, they need to take care of it in order to qualify the same. 1 minute. Now, like as Jagdish discussed, in case of export of service or export of goods, whichever it may be the case, we have two options. As an exporter, they have a two option. Either they can go with payment of tax, or they can go without payment of tax. Whenever they go without payment of tax, they can claim refund of unutilized ITC. And when they go with payment of tax, they can claim refund of tax paid. Now, in this, I want you to bring to your notice one important thing, that even in cases, see, what people think that export will be qualified only when you are exporting goods or services which are taxable. That is a wrong impression. Even the goods or services which you are exporting, even though qualify as exempt, you are still eligible for refund. For export, there is no criteria that goods or service should be taxable in order to qualify as export and in order to qualify as a refund. The only condition they said that it should qualify as export of goods or service. So even if you have been providing any goods or service which is exempted from the tax, then also you will be eligible for the refund of the same. And same has also been provided in the act itself. Further, if you know, whenever you are doing exempt supply, we know that we won't be eligible for ITC. Whatever expenses I have incurred, on which I have paid tax to my supplier, I'm not eligible for ITC in normal cases where I am making supply to domestic. But when it comes to export, they themselves has allowed you to avail the ITC. Why? So that, as we know, purpose of the export is to promote India. So that's the reason, even if in case there is an exempt supply, you are eligible to claim the ITC and you are eligible to claim refund of such ITC. Now, as we discussed, we got a two option, with payment, without payment. First, I am discussing without payment of tax. Reason being, in export of service, most of the people goes through without payment of tax, because if we go with payment, obviously blocking of working capital happen. But if you will notice in goods also, goods is morely routed through custom. So in that, more or less, we don't need to make separate application under GST, as it is routed through custom, and as explained by Jagadeesh, through custom we get all the refund, whether we do with or without, that's an option available to us, but most of them go without payment. So I am also first focusing on without payment of tax. In order to claim the refund in case of export of service. Now, what I am discussing, my discussion is basically limited to services. So whatever I am going to discuss in my subsequent slides also will be relating to service, but wherever it is connected to goods, I will write about it. So in order to get the refund, first thing you should notice that you should be registered person. Now, if you will notice, when we started our discussion on refund and when the section 54 he referred for refund, there was one thing he said, any person can claim refund. But in case of export of service, it's not the case that any person can claim refund. In order to claim refund, you need to be registered because only registered person can claim ITC. Section 16, which says only registered person can claim ITC. So therefore, in order to claim refund under export, you need to be a registered person. Without registration, you can't claim refund. Second part, as discussed, export of service. Definition of export of service, 5 criteria you need to keep in mind. You need to get qualified, then only you will be eligible for refund. Third part, there should be an execution of letter of undertaking. Now, what is letter of undertaking? Letter of undertaking is nothing much a declaration which you are giving that I am actually doing export and this export is in compliance with law. If there is any non-compliance, I will pay the tax with interest. So it's simply an undertaking to protect the government revenue. Then realization of sales proceed. There should, in case of export of service, this is most important condition that you should receive the money in forex. If you don't receive the money in forex, you won't be eligible for refund. Now, in some circumstances, even INR is permitted, but that we will discuss in our subsequent slide, where even if you receive in INR, you are eligible for refund. But if you will notice, when previously when we were discussing about export of goods, realization part was not required to be disclosed. Even it was not required to be reported in refund application we are doing. But when it comes to service, it is directly linked to realization. Because being an intangible, how a person will know that there has been actually a service has been provided. Because then everybody will raise the invoices in order to claim the refund wherever credit is getting accumulated due to some or the other reason. So realization of sales proceed work as a check to ensure that actually you have made the export. It's not give any certification, but it works as a check to show that there is a export. So you have to make sure whenever you are filing refund under export that all these 4 conditions are satisfied. Now, in case of registered person, like I discussed, but there is one exemption. Now, whenever your turnover is below 20 lakhs, you are not required to take registration. Now, you may question me that it is an interstate supply. And for interstate supply, there is a mandatory registration under section 24. But the thing over here is, in case of only and only service, not good. In case of only and only service, they have provided an exemption that if you are below 20, no need to take registration. Now, this thing will come in handy who do a contract work or who do a not a regular basis. Time to time, they take 6 months, 7 months. So it's advisable to them based on the inward expenses they are incurring. See, comparison need to be done, practical approach need to be assumed, compliance cost plus ITC refund which you are going to get need to be checked. Based on that working, you will decide whether we have to take the registration or go for refund or not. So a person who is not having any much ITC related expenses will be coming in, then they may opt for this exemption. Instead of registration, going for refund, going for GST compliances, they can, by using this, they can avoid it. However, if it's a regular work, expense is going to increase and refund accumulation will more than the compliance cost, obviously you should go ahead with registration and file the refund application. But it's all situation to situation. Then place of supply, I have already stated. It needs to be checked and it is given in the presentation for easy reference. Then comes your part of realization. As we discussed, realization is very important criteria in export of service. And why it is important also, I will discuss because it plays an important part in refund computation. Now, there may be a situation that in some cases you might be receiving in INR. So they have said that wherever RBI has allowed, even if you have received in INR, you will qualify it as export. Plus, where people are receiving in Vestro account, Vestro account and Nostro account, then also it will be considered as a receipt in Forex, even though ultimate amount you are receiving in INR. Another important point you need to keep in mind, they have set a time limit for realization. Because it's not the case you raise the invoice, you might receive 3 year, 4 year. That way it will not work. They have set up a time limit. If you don't get the realization within that time limit, then the export which you have made will become taxable and you have to pay tax on the same. However, you have to remember, I discussed about exempt supply. In case of exempt supply, they can't recover any amount from you because it is exemption. So no tax is payable. So no recovery can be made. But in case of export, which is of taxable goods has been made, you have to make sure you receive the realization within 1 year. They have given a 15-day bracket. So if you have not received within 1 year, 15 days, they will, as per law, you are required to pay the taxes. Otherwise, they will initiate the recovery for the same. Then another place where realization may not happen is where you might have outsourced part of your work or service to other party. Now that other party may be located in India, may be located outside India. So when you have outsourced part or maybe full, whichever may be the scenario, obviously it may be a case the recipient from whom you have got the work, maybe that recipient might have paid 50% or 40% to you for your work done and balance to that third party to whom you have outsourced. It can happen that at the source only division of consideration happened. Now, when that happened, now you might have raised an invoice of 1 lakh or 2 lakh, whatever may be the case, and you might have received 60%, suppose 1,20,000 you have received and 80,000 has been received by outsourced party. So in this case, obviously there will be part non-realization. How we should do or how we should deal with it. So they have clarified in that situation. They have clarified of the case where the outsourced party is also located outside India. So they have said in such situation, even though you have received 120 only, you haven't made full realization, I will consider it as a realization appropriate, proper as per the export of service, provided if it is outsourced to a party who is outside India, you should make that 80K service which you have received from outside party. Obviously, you are liable to pay all the tax on the same as import of service under RCM. So you have to make sure you pay tax on outsource, which is outside India, as import of service under RCM. You can claim ITC of the tax paid under RCM and can claim refund. And plus, about this export consideration, which is written outside India, you have to get the RBI approval or specific instruction. If that is done, even though you have received the part consideration, it will qualify as an export and you would be eligible for the refund of the same. Now, distinct person part, like I discussed about merely establishment where branch office, license office or representational office, which is of one country here and another in India and one in another country. In that case, even though they qualify as export, but will get disqualified due to point number 5. However, we need to take care if they are regarded as two separate legal entity in their own countries, then this will not apply and you will be eligible for export and you can claim refund for the same. Now, letter of undertaking. We are discussing one by one the condition and export of service, the criteria which need to be fulfilled. And in that respect, what are the issues which may arise and how you can take care of it. Now, another letter of undertaking, like now many of us are receiving notices ASMT 10 from the department saying us to furnish export documents. So they are simply using ASMT 10. writing a notice and saying, give me all the export documents which respect to what you have disclosed in GSTR 1 and 3B. I hope so many of you must have received that. Now, first of all, ASMT 10, when we say, is a scrutiny of return, section 61. Though under law, as per section 61, they are not under power to ask me export document. Now, ask me the reason why. Reason being 61 deals with where there is a discrepancy. Now, what discrepancy they notice? My GSTR1 is showing same, GSTR3B is showing same, 99C detail, which I furnish, all are showing the same detail. There is no discrepancy between the data furnished on the GST portal. So when there is no discrepancy, by issuing ASMT 10, they can't ask me to furnish the export document. However, but the fact is they don't listen all this thing. They will say either you furnish or otherwise I will confirm the demand. So it is also important now why we are discussing refund. Refund is not we are discussing only from the point that what you should do, but how you should also address the various notices issued in this respect. So there may be a case because in past year, maybe some people may not have executed LUT, or even after executing LUT, they might not have kept the record of the same. Am I audible? Just one. Am I audible now?
Yes, you are audible.
Okay, fine. Sorry for technical detail. Technical issue was there. Okay, so what I was saying is LUT is just a procedure compliance. Now the question which arises due to LUT, whether the refund can be, whether the export benefit can be denied. Now the first and foremost thing is to be noticed is when we started, I started with the word and definition of export of service. Now, when I define export of service, there was only 5 criteria mentioned, and there was no mentioning about the LUT. But when we comes to refund, then only the question of execution of LUT arises. So it's not that to fulfill export, LUT should be there. To claim refund, LUT need to be there. But in past, there has been a situation where the refund, where the either LUT could not be executed or where the LUT, even if executed, was not saved. Now, what can be done? Now, it's a procedural debate. Obviously, at once, officer is not going to agree. But to you all, we would like to bring to your circular 37. If you will notice over here, it has been said that substantive benefit of zero rated may not be denied. So even government is acknowledging the fact that if export is in compliance with law, just due to LUT not executed, you should not be denied the benefit of it. One. Further, it is said that even if there is a delay in executing the LUT, officers are allowed based on fact and circumstance to condone such delay, which itself shows that benefit of export is not dependent upon LUT. Even refund, just because LUT is not there, should not be denied. But at the first instance, obviously officers are not going to agree. But for the past period, you can use this to explain your case. However, it is advisable if, as you know, 31st was by 31st March, you have to do LUT for the period 24-25. I hope all of you have done it. Even if you haven't done, now also it is open. Go there, file your LUT for 24-25. Now, another part is export of exempted goods. Like I told you, in case of exempted goods, there is no outward tax payable. As no outward tax is payable, there is no necessity to execute LUT also. And same has been clarified by the government also. So in case of, if you are doing export of exempt good, you can take the benefit of the circular and defend your case. However, to avoid litigation, even though it is an exempt, though not required, and it is specifically mentioned, but officer doesn't understand. So it's better to execute and to ensure your smooth filing of refund application and processing. Then, as we understood all the basic of export of service, what are the issues which you may encounter? By covering those, we have discussed what you can do. With this, we come to the part of refund computation. Now, in refund computation, as in the previous also, while discussing export of goods, these terms you must have seen. Similar are the terms in case of service. But the few points, I will not go into detail, but the few highlighted points I will discuss, so that if you are having any of those issues or struggling with any of those computation, you can take care of it. So zero rated supply of goods has been already dealt, that how the value of the goods they will determine. Means the value you disclose 1.5 station, 1.5 times similarly placed good, whichever is less they will consider and they will compute. Okay. Now the thing is that over here, whichever is less, means out of this three items, whichever is less declared will be considered. Now the question which arises, okay, one is numerator, one is denominator. Numerator is the amount based on which I will get the refund.
Denominator is the total turnover which will be used to reduce my ITC refund if I am having domestic also. See, if you are engaged in 100% export, this will have less impact. But if you are having domestic and export, then this working will, this definition is definitely going to have an impact. Why? What the officer do? Numerator, they will take whichever is less. Denominator, they will take which is disclosed in GSTR1. So if what you have disclosed in GSTR1 and shipping bill, GSTR1 for export of service and shipping bill for export of goods, whatever you have shown in that, they will consider. They will try to consider whichever is higher in denominator and lower in numerator. As a result of this, obviously there will be some refund disallowance because denominator being higher than numerator, even though you are 100% export, some part of the ITC refund will get rejected due to this working. Now, when we comes to service part, service is not dependent upon the invoicing. Whatever period, maybe in the month of April, you have disclosed 10 lakh rupees invoice. It doesn't matter to us. It doesn't matter for refund calculation. What they are concerned with, they are concerned with how much you have realized in this period. Now, when we talk about realization in this period, it may be 8 lakhs, suppose. This 8 lakh is not important that it will be relating to fully to your this current year billing. It's not important that it will fully relates to this current year billing.
So this is not important that this fully will relate to your current year billing. So this 8 lakh may consist of realization made for the past year bill or past year months. So it is wholly dependent upon realization. So while furnishing the return, like statement 3, he was showing it to you. By furnishing the statement, in that is furnished based on realization. So 8 lakh realization which is made in April relate to which invoice you have to furnish those details. Now, there may be a case of advance. Now, as we are discussing that service is independent of invoice raised. It is based on realization made. Now, in realization, okay, 8 lakh I received, okay. Again, the invoice raised, that's okay. But there may be a case I might have received advance. What about advance? Now, suppose 1 lakh is the advance which we have received in the month of April for the work of May. Over and above this 8 lakh. Now this 1 lakh advance which you have received, this will not form part of your computation.
Ma'am, your screen is not visible. Can you please reshare it?
Now is it visible?
Yes, it's visible.
Okay. So this 1 lakh which you have received as advance will not form part of this April month. When you will raise the invoice in that month, you will show that realization. So this is the difference between your goods and service. Goods is dependent upon your invoice raised. Service is dependent upon realization made for the purpose of refund computation. Now, adjusted total turnover, which he has already discussed. But in this, I will just bring to your point is, when we discuss about goods, we came to know whichever is less. When we discuss about service, whichever is realization. Now, I want you to take you to one example. Okay, this is the detail where the goods is also there. S represents service, G represent goods. So in this example, goods is also there, service is also there. Now, if you will notice, they will take most of the time FOB value, not your invoice. So this is your FOB value. And in case of service, as I told, realization. So over here, FIRC details has been furnished for whatever realization you have done against the service. So this is your good value, export of good value. This is your service value. So my total of A and B, my goods and service value is coming to 3 crore 6. But if you will see the detail which I have furnished in GSTR1 for goods and service is 3 crore 1. Now, due to Forex, obviously, sometimes realization fluctuation will be there. When we give over here detail, we give as per FIRC, which may be higher, may get higher from the invoice raised due to difference between date of rate due to exchange rate difference. So the invoice which I have raised relates to 3 crore 1. But when I do based on the computation given in the rule, it is coming 3 crore 6. Fine. Now over here, I am assuming my domestic sales to be 77 lakh. Now, what should be my adjusted turnover? My adjusted turnover should be 3 crore 6 plus 77, or it should be 301, that is the invoice raised, or 77. What do you think? Whether it will be point A or whether it will be point B. You can write your answer in chat box. 3A is based on data furnished, based on invoice raised and reported in GSTR1. 3B is based on the calculation which is provided for turnover, not for adjusted total turnover, for turnover. How to derive your goods or service value is what? I hope so now it is visible. Okay. In this example, if you will notice over here, goods and service, both the data is there. Here the party is engaged in both export of goods and export of service. Now, export of goods, they take lower value, which is based on FOB value, not on invoice base. And service, they take on realization. As per the rule which we read, our zero rated turnover will be this A, that is FOB value for export of goods, and value which is realized for service B. So my export turnover became 3 crore 6. And when we see the data which is furnished in GSTR1, it is coming 301 due to exchange rate fluctuation. The difference between 306 and 301 is due to that. I have a domestic sale of 77. Now I am asking, as per you all, what should be my adjusted turnover? Whether it will be turnover reported in GSTR1 plus domestic sale, or it will be basis of zero rated turnover as calculated as per the rules plus domestic sale. Which one it will be? 378 or 383? Now I am getting some answer, mixed answers. Okay, so now it should be actually 3 crore 83. It cannot be 3 crore 78. Reason being, what you are taking my numerator, there cannot be a change in denominator while considering the value. And the set fact has also been clarified in the circular. So as per amended definition, what you are taking for goods and service as a numerator same amount you have to consider as a denominator in order to arrive as a adjusted total turnover.
No, though this is clarification has been issued, but no change in the rule. But as department circular are binding on the officer, they should follow this. But in this, if you will notice, there is one more technical problem. The problem which is when you go to your portal site, they will not allow you to file with that. They will immediately give you an error. The value declaring column 1 of statement 3A cannot be greater than the consolidated total document value 301. So over here, due to portal issue, our hands get tied. And as a result of it, when you do the computation, you will notice that you are getting you are losing some part of refund computation. Like over here, when we did on the basis of 306, the turnover which is driving as per the value, and accordingly considering in a tax your adjusted total turnover, we were getting 52,68,000 as a refund. But due to portal issue, now we are getting 52,51,000, due to which I am having a reduction of 17,000 as a refund. Over here, though it seems to be small amount, but it can also result into a higher demand depending on the case to case. Okay, maximum refund he has already discussed, lowest of the three. ITC part, I will just cover up the fact that ITC, he said input and input service and capital goods is not allowed. The fact is capital goods is not allowed, but one important thing to be noted is sometimes service are also capitalized. Capitalization of service doesn't mean capital goods. Just for example, there may be a case of supply of AC and there may be an expense for installation of AC. Now, as per accounting standard, obviously in books of account, you will capitalize that. But it doesn't mean the service component which you have capitalized will become capital goods, because there is a different definition of capital goods under GST. The way the books work, the similar way it doesn't work for GST. Though if we see the capital goods definition, it says the value capitalized, but it need to be noted, it says the value of goods which is capitalized. So in service, if you have capitalized, you can still claim the refund of the same. But obviously it will be highly debatable, because at first officer may not agree, but how the way you prepare the annexure B, which we discussed previously, that you have to give the details of invoices on which you have claimed ITC and now filing for refund. Over there, what the HSN code you use will determine the fate of it. Plus how the invoice has been issued by your supplier will also determine the fate. Then obviously you have to be careful for the part that what are the transactions which is appearing in, which you can claim ITC only of the transaction which is appearing in 2B. So accordingly for refund also, you have to make sure. If there is a case where you have availed ITC and 3B has not been filed your supplier, then there is a provision to recover the refund amount which is sanctioned to you. So they will refund it. If any of the non-filer are there, the first thing you should do is you should not claim the ITC. You should park in 4B2 of GSTR 3B. 4B2 is a temporary parking or temporary reversal place where you can park it and claim whenever your supplier file the GSTR 3B. Even RCM ITC, if you are having, that also qualified. It's not only the forward input and input service which qualify, even RCM ITC will also qualify for refund. Relevant period, we have already discussed. what are the relevant date, and relevant period is the period for which you are claiming the refund. If you are filing refund for April to May, that is the relevant period. But in this, one thing we'll like to bring to your notice is about the fact that there is no way frequency has been provided. There is no frequency has been provided. It's all upon you. Whether you want to file monthly, you want to file quarterly, you want to mix match and spread it across the financial years, all on you. Because in order to optimize the refund, see, where the people is fully engaged in export, there is no problem. 100% exporter, there is no problem. Because whichever way you file, you will get the refund. But when there is a export and there is a domestic, then you have to be careful and you have to do your working in a such a way, because wherever you are having domestic in a month, in that month you will get less refund. So you need to be careful and you have to check in which case and whichever way I should club my months or the quarter in order to get the maximum refund. But that situation will only arise where a person is having a domestic sale or purchase. So you need to check for that. Then procedure for refund. Now these are the various form which is there under refund application. We do RFD01, filed our application. Fine. After filing application, now officer has two choice. What are the two choice? He can accept your refund as it is, and he will accept when the refund has been filed in accordance with the law with all the documents which is required. So once you have filed the refund which is in compliance, which is his satisfaction, then he will issue you an acknowledgement in RFD02. However, if you notice there is something which is missing, which need to be included, has not been included, then he will issue a deficiency memo. The moment he issued you a deficiency memo, you have to do a new refund claim. There is no option to rectify, amend, nothing. Go ahead, do a new application. Now, when you do a fresh application, one thing to be kept in mind is time limit. Sometime it happened, we do the things at the last moment. Now, you might feel that 2 years is the time limit which is allowed. That may be the time when you have applied, it was verge on completion. Now, here they have given a little exclusion. Now they are saying the time period which is for application till deficiency memo, I will not count for the purpose of calculating time limit. So that 2 year will get extended to the extent of this days difference between the RFD 1 and 0, and you can do the fresh application. This you need to be keep in mind if anybody of you are filing at the end moment, and you might feel that you have means due to which some part of the refund you might get rejected. By using this, you may get 100% refund. Second part is even after filing RFD02, means he has issued acknowledgement, he has accepted your RFD01. It is not the case straightforward. They will issue your order that your refund is sanctioned. That is also not the case. Sometimes they might issue you a show cause notice seeking certain clarification if they are having the doubt that the transaction on which you are trying to claim refund, either there may be a case of supplier non-filer or maybe, or there may be a case of ineligible ITC. For different reason they can issue. Even the turnover part, like I discussed previously, on turnover part also they might question you. So based on case to case basis, if they identify there is some difference or details are not matching as it should be, they will issue you a show cause notice. Obviously, you have an opportunity to reply to those show cause notice, give your clarification in RFD09. If they are satisfied with everything, they will issue you a provisional refund. They will give you a payment advice, and finally the order which shows that your refund has been sanctioned. Now, there can also be a case of refund non-sanction. They rejected your refund. What you can do? You can go ahead and file the appeal. You have the option to file the appeal against the RFD06. Now, if you will notice, there is a PMT03 you need to furnish. Over there, you write. If you are going for appeal, then you have to say, I am going for appeal. If you are not going for appeal, you have to mention over there. It's just a click form. You have to tick which option you are choosing. If you says that you are not going for refund appeal, then obviously the electronic credit ledger which has got debited due to your refund claim will get recredited. Okay. Now another situation you can ask me, maybe I might have filed for 10 lakh, 8 lakh got sanctioned, 2 lakh not. How I should get that part amount refund? There may be also a case you filed refund order, fully got rejected, fully got credited. You may got multiple reasons. Now, in case of export, like I showed you, even due to domestic turnover, I was losing 17,000 refund, though it's a small amount. But then also, what you can do is, if you are not able to get your refund to the extent you applied, or due to some reason or other reason, you can go ahead and do export with payment of tax. So while doing export with payment of tax, you get refund of what tax you have paid. Now that tax can be paid through cash also, through ITC also. So unutilized balance of ITC, which you are not able to use or you haven't got the refund, you can, by doing one single transaction of with payment of tax, you can claim it. Means by showing export of service without into with payment and claim the refund of the tax paid. So even your balance which is still lying and you are not able to get the refund, you will get the refund, provided all the conditions are met. Like capital goods, like we discussed, capital goods refund is not eligible in case of without payment. So you can go ahead, do with payment and also claim the refund of capital goods. So that's a one opportunity to claim the refund even on capital goods. These are the document requirement which already we have discussed. So I will not discuss into it. With payment of tax, as I already said, whatever you pay, you will get. But the thing you have to make sure that you furnish a valid return, means your 1(3)(b). Like he was discussing about the discrepancy. You have to make sure there should not be any discrepancy. If discrepancy is there, you should make sure you have taken care of it. So while furnishing your valid return, you will immediately get your whatever tax you have paid on export and you can claim the refund of the same. This is again a document requirement. With this, we come to an end of our session. If you have any query or any issue, you can ask to us. If anybody is having any issue or any query on the export, on the today's session, they can ask to us. Can the officer in case? Okay, so one question is from Rakesh ji, that can the officer in case of with payment of tax through ITC can request for ITC register for sanctioning of refund? Answer is yes, because the reason is whatever ITC you have used for payment, he has to check the eligibility of it. He can't give you straightforward refund. Even though you may say that with payment of tax I should get, but he has to check the ITC eligible and they will ask. Even in circular 125, power has been provided, then they can issue a show cause notice for recovery of ineligible ITC if you have claim in your refund. So yes, they can ask for it.
Yes, ma'am. I want to add.
Yeah, go ahead, Jagadeesh.
Yes, in case of with payment of tax, there is no manual intervention would be there. It's a totally automatic procedure. So after sanctioning of the refund, they may ask for ITC eligibility. But at the time of sanctioning, they will not ask for any ITC register. It's a fully automated.
In case of export of service with payment of tax, they will ask. In case of
Yes, in case of yes,
automated.
yes. In case of goods, not required. I think some other questions are also there in the chat box. Regarding ITC, someone has asked the question. IDS.
Okay. Can I transfer SGST credit balance to IGST through refund application? I didn't got your point, what you are trying to say. GST credit balance to refund application. If you are talking about that in individual head of ICS, you were not having the quantum you want to claim refund. Like in Jagadeesh, he was showing you that in ICNS in individual head, based on the computation which we are doing, may not be there at the time when we are filing the refund application, because they count the lower of the one, but refund is sanctioned based on total ITC, not individual headwise. So if that is your query, then this is the answer. But if you have something else, you can unmute and ask your queries. And one which we are saying, Jagdish, can you read out the question? Okay, fine. Okay. In continuation to my other, I just wanted to know whether they will ask or only for relevant claim. To the extent of refund claim. Rakesh, they will ask to the extent of refund claim. To the extent you are showing as ITC utilized toward the IGST payment. You need to give the breakup of that. Yes, Annexure B to be submitted.
Madam, can I speak Hindi, madam?
Yes, sir.
मैडम व्हाट वाज कितना वक्त लगेगा मैडम रिफंड प्रोसेस कंप्लीट होने के लिए ऑफिस के बाद एप्लीकेशन सबमिट करने के बाद
Minimum 15 days, they have to issue RFD 02, like we discussed, acknowledgement or deficiency memo. They have
Okay.
3 month time to process the refund, but they most of the time they do within 1 month.
Okay.
Anybody have any else question? They can unmute and ask. Otherwise, we'll move to our next session. So, moving to our technical session. Pratyusha, over to you.
Thank you, Ashika ma'am. That was indeed a very good GST session. Now let us move into the technical side of the session, which is about our cost centers. So we have seen accounting grow from doing an accounting in paper by writing both debit and credit, which because of technology, we went into Excel. Then came softwares which helped us account. With that growth, our accounting has not changed. We have still got so used to any purchase, record it as a purchase ledger. Any sale that we make, we account that as a sale ledger. How is it different? How did we evolve? Only technology evolved, we didn't. One such technological evolution or accounting evolution, which we should bring in each of our accounting, is by making our daily accounting as a management accounting. How is accounting different from management accounting? Management accounting would nothing but mean an accounts, a books of accounts, which is very helpful for the management to take their decisions. What is the first step that I should take in order to do that? That is cost center accounting. Let me take you through the cost center accounting. Just a second. Yes. So the agenda for our tech session today is what are the benefits of a cost center accounting? What are the different types of cost centers that I can create in Tally? And how is this cost center accounting helpful for me to analyze my business? Firstly, if I see about what are my benefits, first thing is my decision-making process is very easy. So in order to understand this at a later point in this session, I will take you through an example wherein through one data that I can extract from Tally, that is cost center data, I will be able to take several decisions from that. Secondly, it will help me understand what is the growth of my business. What are the resources which are not getting utilized properly? What can I do better to increase my profitability? Second, I am able to streamline my costs and processes. So there can be a situation, assume I'll take an example of a manufacturing company where I manufacture 10 types of goods. In 10 types of goods, if I am doing cost center accounting, I understand that 5 of the goods are very profitable. However, the remaining 5 are not. Because of this remaining 5, my profitability is being pulled down. By doing this cost center accounting, I will know which costs for these products are unnecessary. If I avoid that, that product will come profitable. The next benefit of a cost center accounting is it helps me operate my business very efficiently. As I will not have unnecessary costs, my operations are very easy. It will go very smooth. Next, I will be able to make accurate forecast. That is, I will be able to budget. I will be able to say, this will be my sale, this will be my costs, and this will be my profits. So what more does a management need when all such is streamlined? Coming to the type of cost centers, I will, in my point of view, I will segregate them into 2 things. First thing, with a manufacturing or a production company, what kind of cost centers they should create. And the secondly, towards what for a service industry. What kind of cost centers will help me able to give me proper data for management analysis? What kind of decisions can I take? First thing is, like I said, you can see cost center wise profitability. For a service industry, when my assume I have a service industry who supplies manpower. For me, my cost center there is nothing but the employees. So I can necessarily see for one employee, what is his cost? For that employee, how much revenue he is deriving. By that, I will be able to know what further decisions I can take. What further budgeting can I do? How can I propose my prices to my customers? Next, determine controllable costs. Cost center creation helps me determine the differentiation between controllable costs and uncontrollable costs. Controllable costs, when reduced, my profitability will increase. Uncontrollable costs, when, as the name suggests, I can do nothing to it. They are inevitable. So what I should be concentrating on will be my controllable costs. Second thing will be optimizing my resource allocation. So like I said, taking example of the service industry again, I am a manpower supplier. I have several customers to whom I supply manpower. To one customer, a single manpower when I supply, I am getting a profit of 20%. However, if I supply to the other, I am getting a profit of 30%. How will I know this? Only by cost center analysis. Then, to increase my profitability, what I would do is, I will remove him from the customer who's giving me 20%. I will put him to the customer who's giving me 30%, which is more beneficial, which will increase my profitability. Second thing, customer-wise profitability. Just some time back, I mentioned to you about the resource allocation. Now I come to even the top level, which is the customer-wise. So I will know how much, which customer is generating how much profit to me. Is it worthwhile to spend my resources on one customer, or take those resources, spend it on another customer? This will be very, very beneficial for each one of us to tell our managements. As finance and CS professionals, we have our goal of giving the utmost useful information to our management. I think that is all our primary responsibility. Let me take you to the example, like I was stating. I have a tally here, which is of XYZ service industry. So this is a service industry. So let me see what is the benefit of creating a cost center. So this is cost center created service industry. So when I see, just a second, I guess it's loading. Yes. So hope my screen is visible. Yeah. So if I see, as this is a cost center enabled tally, if I see there is a cost category called 1711114. This is nothing but a customer for the XYZ company. So in this, if I see this, I can easily tell you, saying for this company, a person called Prem Kishore is working from a department called CAD, which is an engineering department. He, for the month of October to December, is generating a revenue of 2,31,000 for a cost of 2 lakhs. That means he is getting a profit of 31,000. However, if I had not booked under cost category, overall company's sale and cost I will see. Can I necessarily find out what is profitability of Prem Kishore? What is profitability of this company? No. So to show you the benefits of this is how the accounting was done. So first thing, they created a category, that is the company, under which they created a cost center called, with the department, employee number, the employee name. By this, it will help them easily derive reports that I can present to the management. I will show you an Excel export version of this, which will help. So this is what I exported from the tally, what you just saw. I just made alterations to the data, which I got from tally, where this is the cost center. I broke it up into the department, employee number, employee name, simply ran a pivot table. And this is what data I get. That is, from the department of CAD, I understand revenue is 70 lakhs for a cost of 71 lakhs. So I have a negative margin, which is very less. So over here, if I send this data to my management, the management will say, yes, for the month of October, the department called PD was profitable than any other department. If in depth they go in analyzing it, they will understand which employee. So in-depth analysis, what you can do is employee-wise profitability, like I mentioned. So this employee number has a cost of so much, revenue of 6 lakhs, so negative margin. Profitability, if I see, there is a person called Kiran Kumar. He has a cost of 3,65,000 for the month. His revenue was 4,25,000. So that means this person was profitable. So cost center accounting would help you do such kind of analysis, which will be very easy for understanding. Hope I was very clear with the service industry. Let me take you through the next industry, which I said, manufacturing industry. So this is a manufacturing industry which makes fixtures, parts for another company. So there is something called fixtures, which they created as a major category. In that, they created a cost center of the company, its purchase order. When I go into that, they created a sub-cost center with the fixtures number. By doing this, what will happen? I can understand the profitability at multiple levels. First, at the fixture level, next at the PO level, next at the customer level, next at the unit levels. If we go back, if you can see, these are the different units that they have, not a single unit. They have different factories. So different factories are called considered different units. They want to analyze factory wise. So even that can help you. Factory wise or location wise profitability is also easily derivable. So hope this gives you a very much overlook on the what kind of uses happen with a cost center accounting. Now I will hand over the session to Shilpa to explain and take you through the TDL or the add-ons, what can help you do this cost center analysis. Shilpa, over to you.
Shilpa from Tech Team. I have developed 3 add-ons. It will be useful for like GST rate and HSN code. While passing sales entry in voucher screen, you will get the UDF as a like GST rate and HSN code. For that, first we have to configure the TDL in Tally. First, I will show you how to configure that TCP. My screen is visible. Come to Tally. Just go to F1. Just a minute. F1 TDL add-on, manage local TDL. Just give the path of the file. Here I have 3 TCP files. Like for example, GSTIN and party name filter in sales columnar report. Then which one I have earlier explained. No? Stock item GST rate and HSN in voucher screen. So first I will enable stock item GST rate and HSN code in voucher screen. Just go to sales, sale GST. Here, just select any party. By default, inbuilt Tally, we can't get this HSN code and GST rate. Once I configured the TCP file, you will get the new option like HSN code and GST rate. If I select any item, it will automatically show the GST rate and HSN code from the master level. The advantage of this add-on is no need to go to the item master level. If I want to check, I have defined GST rate or HSN code in this respective item means I need to press Control Enter. Again, I need to go here. So if you add this TCP means you will get the HSN code and GST rate in this screen only. You can select any n number of items and you will get the respective item HSN code and GST rate. Again, I will enable the second add-on as a amount search in daybook. This add-on is helpful to search for example, I have n number of line items in daybook. Here I have so many entries. I want to filter some specific amount. For that, just you click on amount search. Just give the whatever you want. Like I want to check 6,200, how many entries are there. So equal amount you need to give. If you give approximate amount, it won't filter. So here it's for 6,200, only one entry is there, that is payment entry. Again, one more add-on. F1, same as it is. TDL add-on, manage local TDL. Just enable the third add-on as a GSTIN or party name filter. Display account books, sales register. Just select any 1 month. Go to columnar report. Just enable the GSTIN. If it is enable means just press Ctrl A, or else you need to enable GSTIN option as yes. Here last party GSTIN option is there. If you click on this one, you can filter line item by party name as well as GSTIN. You can select anything. So I will select something GRP. I want to filter how many entries passed for GRP LTD. MH. So this is the same option we have provided in purchase register also. I will show once. Here you can select anything, Venu and Vinay, whatever you want. By name or by party GSTIN, you can filter the details. Any doubt? Based on requirement, if you want any additional add-on means, we will take requirement and we will develop and we will give.
Thank you, Shilpa. That was a very insightful session. So we got to see a lot of add-ons that we can make to Tally to make our day-to-day activities more easier. Because our accounting is becoming more and more robust every day. So yes, I guess these additions to our daily accounting life will make our presentations way better, make our analysis more better, and a lot of our day-to-day works easier. So with this, I would like to conclude today's tech session as well. After the end of this session, we would be sending out to you an online form that has to be filled, post which you would be receiving a link to download today's presentations. which would help you with a reference point at a later point of time. Thank you each and everyone for today's session, attending and giving us an opportunity to present to you. Thank you, everyone.